Perth property jumped 26% in a single year. That's $222,000 added to the average house while you slept. But ANZ says that number crashes to 1.5% next year. And if you're buying in the wrong city right now, you're walking into a wall. I'll show you which of these three cities actually builds wealth from here. Pick the wrong city, it costs you hundreds of thousands, not over a lifetime, over 5 years. Perth has an expiry date nobody talks about. One city returned 80% in 5 years. Sydney lost 33,000 residents, and I'll show you where that money landed. In 90 seconds, I'll reveal the one ratio that tells you whether a city is about to boom or about to stall. Let's start with the city making all the noise, Perth. 25.7% growth in 12 months. Median house just cracked 1.09 million. Vacancy rate sitting at 0.4 to 0.5%. That's essentially zero empty rentals across the city. Advertised stock is 40% below the 5-year average. When there's nothing to buy, prices go up. Simple maths. If you own in Perth right now, the last 12 months look incredible on paper, but what happens to that equity over the next 12? ANZ forecasts Perth will grow 12.3% through 2026. Still the strongest capital this year, but in 2027, 1.5%, from 26 to 1.5. That's the sharpest deceleration of any Australian capital city. If you buy into Perth today at 1.09 million, 12 months from now, you could be sitting on solid equity. But 24 months from now? The forecast says your growth has almost stopped, and selling in a decelerating market is a lot harder than buying in a rising one. The supply crunch that drove Perth's boom, labour shortages, planning delays, those aren't fixing overnight, but affordability catches up. Perth jumped from a value play to over $1 million median. The buyers who drove the surge start hitting their ceiling. The music doesn't stop, but the tempo changes completely. Perth's rental yields are 4.3% for houses and 5.9% for units, best of any major capital. Sydney, 2.6%. Barely worth the stamp duty paperwork? If you're an investor chasing yield, Perth's numbers are hard to ignore. But yield is rent. Capital growth is wealth. They don't always move together, so Perth is brilliant for cash flow right now. But for capital growth over 3 to 5 years, the forecast tells a very different story. One city quietly delivered 80.6% growth over 5 years. It's not Perth. Now, if you think the safe choice is any better, here's Sydney. Most expensive city in the country. Median house, $1.62 million. And right now, it's going backwards. Since November 2025, Sydney has dropped 2.1%. That's roughly $28,000 wiped off the average home. While Brisbane and Perth climbed, Sydney shrank. And it's not just prices. People are physically leaving. ABS data from 2024-2025 shows Sydney lost 33,282 residents to other states. Not tourists, not temporary moves, gone. So where did they go? Brisbane picked up over 11,000 from interstate. Perth gained 8,200. And those people didn't just bring furniture, they brought Sydney equity, Sydney deposits, Sydney spending power. That migration isn't random. It's a verdict. Here's the ratio I mentioned. Sydney's price-to-income ratio is 10.1. The median home cost more than 10 years of gross household income. The international benchmark for severely unaffordable is 5. Sydney doubles it. Only 14% of Australian households can actually afford the median home in 2026. 14%. That's not a housing market, that's a velvet rope. Brisbane, price-to-income ratio of 9.1. Still tough, but nearly a full year cheaper in gross income terms. Living costs? Brisbane runs about $3,500 to $4,500 a month for a single person. Sydney hits $4,500 to $5,500. That's up to $12,000 a year you keep just by changing your postcode. You don't earn it. You just stop losing it. Sydney's average salary is only $4,000 more than Brisbane's. But the cost gap is $12,000. You go backwards on net, and that's before the deposit. Sydney's median needs $324,000 down. Brisbane? $198,000. That's $126,000 less to save before you even start. So Brisbane is cheaper to buy and cheaper to live in. But does cheaper actually mean better returns? Remember that 80.6% number? Brisbane isn't just cheaper, it has been the single best performing property market in Australia over the last 5 years. 5 years. One city. 80.6% growth. Not a typo. Brisbane gained 80% while Sydney lagged and Perth played catch-up. Over 10 years, 120.2%. Also, the national leader. If you bought a median Brisbane house 5 years ago for around $680,000, it's worth $1.23 million today. That's roughly $550,000 in growth from one property. And here's what makes that 80% even more impressive. It didn't come from a speculative bubble. It came from population growth, a genuine housing shortage, and an economy adding jobs faster than homes. Brisbane has a $7.1 billion Olympic infrastructure pipeline that hasn't even started paying off. Brisbane's house prices are already 37% above the national average, a wider gap than Sydney had before the 2000 Games. And Brisbane's Olympics are still 6 years away. That growth could be front-loaded and done, or we're watching the opening act. Either way, the biggest catalyst hasn't arrived. So what happens when you take the same deposit and drop it into 3 different cities? You earn $105,000 a year. You save a 20% deposit over 3 years. You're ready to buy at 32. You put that deposit into Perth. ANZ says your capital growth slows to a crawl within 12 months. You bought near the peak. You put it into Sydney, minus 0.7% forecast. $1.62 million for a falling asset in a city losing residents. The only major capital expected to go negative this year. You put the same deposit into Brisbane, 9.7% forecast growth. Olympic infrastructure still ramping up. Interstate migration flowing in. And the median house is still $473,000 cheaper than Sydney. Same deposit, same borrowing power. 3 completely different futures. And that difference compounds. Over a decade, the gap between the right city and the wrong one isn't a few $1,000s. It's hundreds of thousands. Most people pick a city based on where prices went, not where prices are heading. Perth gained 26%, but that growth is already in the price. You cannot buy yesterday's returns. Sydney feels safe because it's always been expensive, but expensive and declining is the worst combination in Australian property. You're paying a premium to watch your equity shrink. Brisbane is the only city where the growth forecast, the migration trend, the infrastructure pipeline, and the affordability gap all point the same direction. At the same time, that almost never lines up. Most people will wait for confirmation. They'll wait until Brisbane is in every headline and every podcast. By then, the easy gains will be gone. If your timeline is 12 months, Perth still leads on momentum. If you're thinking 5 to 10 years, Brisbane has already delivered 80% over the last 5. And the biggest economic catalyst in its history hasn't even arrived. The city, making the least noise in the headlines, is quietly building the most wealth. And 33,000 former Sydney residents already worked that out. I'm building a full breakdown of what the Olympics did to property prices in every past host city. Subscribe so you don't miss it.